All righty, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Oh boy, today is April 8th, 2025, year of our Lord, and man, was it a day to remember. But I feel like that's what we say every day in a market where Trump is our president, because it's just the Trump just has the markets on skates right now, right? Like they know they want to sell, but they think they want to buy, and every time they get up to the highs, they just take a nosedive, right? And that's basically what we're seeing every single day. As long as the VIX continues to trade over 30, I will not be bullish or believe that the market is being bullish whatsoever. So as per usual, we're going to break down the S&P 500. We're going to go over our pre-market plan there. We're going to take a look at the Dow Jones, the NASDAQ, and we're going to talk about the index, the volatility index over here. But first and foremost, I want to start the day off with what I saw on X today as I was on my way home to do this market review, which is today was reportedly the largest ever point reversal in S&P 500 greater than October 14, 2008 great financial crisis. And this is all self-inflicted, right? So again, I can't stress this enough when I talk to the traders in the shop. You are currently, if you're in this market, you're trading stock market history. So if you thought trading was difficult, what do you think trading stock market history is going to be like, right? It ain't going to be easy. So if you're getting smoked, right, like it's part of the process, man. It's part of the process. So I'm here to help, if I can. At the same time, like sometimes you just got to take those lumps so you can learn. All right, so the S&P 500, let's take a look at our pre-market plan, because we did not look at things in hindsight, right? We actually traded the market as we were supposed to trade it based off what we had in the market, right? So I'm going to go over some of the trades I took, and I'm going to go over what my plan was, and you're going to understand why I took the trades I took, because my goal is to try to follow my plan every single day. Not try, do, right? So what were the conditions? We were in a bullish retrace of a bearish trend. As long as we stay below 52.86, which was previous day high, 52.86.50, I wanted to be a bear. If we stayed above 50.59, I wanted to be a bull, which was this daily fib here. You can see when we tapped the daily fib area, the market went up. When we tapped the previous day high area, the market went down into this fair value gap. All right. Bullish. Bulls finally found a level or a reason to buy after taking out all of the gains. I didn't say I knew the reason, but I was like, I guess maybe they found a reason, right? They took out all the gains from the previous year. Well, what do I mean by that? Well, if you just turn everything off and you go to the 12-month chart, and this may be surprising to some people, but we're 3 months into the year and we've already engulfed all of last year. Okay. So all of that bull run and everybody was like, man, this thing is crazy. It's never coming down. Well, that shit's over. Right. The market took that out in 3 months. Right. And all it took was a fundamental shift, because we had no business being up here in the first place. That's just my honest opinion. Right. So after taking out the entire year, okay, in 3 months, overnight we consolidated at the highs, right? That's what this little 12-hour consolidation here is, but still have yet to trade above the previous day high, which is when I put little nuggets in there, that's me kind of figuring the market out, like, okay, what you gonna do when you get to the PDH though? As long as we are in the range of the PM session, I will look to short the highs and long the lows, understanding bulls are currently in control. So what are those levels? The highs, 52.86.50 through 51.92.50. The lows, 50.81.25 through 49.73.75. And what are my plans to the extremes? I had two bearish plans that never got hit. 4-hour supply here and another 4-hour supply here, just to reiterate how bearish we are, right? Like these levels aren't being hit. All right. Bullish extreme ended up hitting toward the end of the day, but it was a 15-minute fair value gap. And you can see we were looking for 49.43.75 And I believe the low of the day was 49.40.50. So we got you within 3 points of the low of the day. Through 48.67, and we wanted to look to long the market, just targeting 49.73. And you can see 49.73 definitely got hit because it would have just been the bottom of this range. So this trade definitely was a check in the box. And this was our bread and butter right here. Okay. This was our bread and butter. And this thing paid, and it paid really well. So let me pull up one of my trades that I took on the short. So this is the short trade that I took today. I took the market short on my funded, and then this was a combine trade, right? But I didn't take a picture of the funded trade because it was just so quick. But this was the short that I took on a combine. I originally was in 10 micro contracts. Okay, you can see that here. I was in 10 micro contracts. My entry was 52.92.50. I took profit immediately for 20-30 points at 52.79.50. And then that's the other picture here where I ended up trailing the 5 micros. I hit my profit target at 53 for 3 more micros. And then I ended up getting stopped out for the last 2, roughly locking in about 62-ish points, right? But why did I take the trade? Well, if we go back to the pre-market plan, right, that we just talked about, right, there's a couple things that I noticed that it was time to get short, right? The first, obviously, the VIX was at a level that I really loved, right? I was just sitting there watching the VIX, and I'm like, right? But you can see that on the 15-minute time frame, you can see that we got the rejection candle after taking out the liquidity at the previous day high. Whenever I see us take out a major level of liquidity after consolidating all night, right, inside of London, Tokyo, and Sydney, right, we consolidated all night. And which way did we manipulate first? We manipulated up. So that means I'm expecting expansion down, right? We take out the liquidity, and then we get the rejection candle. And all I do is I go down to the 5-minute now, and I look for that same rejection candle, right? And all I do, and you can see it in the image previously that I just showed, I draw a little bit of a yellow box here, right? And I just tell myself, if price comes back into this area, I tell myself and the Discord members, because we trade live every day, right? I tell the Discord members, hey, I'm looking for price to tap back into the 95s. If we get back into the 95s, I'm going to be looking to short the market. Once I identify the yellow box, I go down to the 30-second time frame. And now I'm just watching price time because I have my 3 W's lining up, right? I have my where, I have my why, and now I'm just looking for my win. My win is inside of my 1025, 1045 time frame that I made up myself. It's my own little macro, right? And then we push up into this level. I take the market short at 52.92. And like I said, I took profit along the way. My target was 52.30, 51.84, midnight price at 51.71, weekly settlement at 51.10. But I couldn't hold it that long anyway. But my ultimate target was daily settlement, and we went all the way to those targets. But if you just follow price, right? Once we left this area, like, I know the market is surprised that we did a turnaround, but I mean, we just weren't. Like, we were prepared for it, right? Like, we anticipated it. As you can see, my pre-market plan comes out. Like, I mean, you can't see that on the chart, but my pre-market plan comes out an hour or 2 before the market even opens. So before price even comes up here, we already have a thesis for what the market's going to do, right? If you want to learn how to make pre-market plans, or if you like anything that I'm doing on here, you ain't got to join the Discord. Just hit the like and subscribe button. That's it. That's all we're going to do with that. All right. So we trade down into the 1050 macro, double bottom here, push up into the 1125. This is when we get the consolidation. So all my scalpers, 11 to 1 or 11 to 12:30 is your game time, right? That's where you want to really start printing. We trade up into 1125, and then it was just straight downhill all day long. Try to get a little bit of a relief bounce inside of the 110 macro, double bottom here, 130, 134, push up, break the high. But again, same thing, just more selling. I don't even know what this candle was. This is a 30-second candle just to piss people off that were short, right? This candle liquidated. This is a 54.30-second candle. Like, this market was crazy down here, right? We continued the sell-off, right, into the close, going all the way down to that fair value gap making us very, very bearish, in my opinion, going into tomorrow. All right, so that was my breakdown for the S&P 500. Let's move over to the NASDAQ because I know a lot of people trade the NASDAQ. Don't have a pre-market plan for it, but again, like I tell the Discord members, if you trade the NASDAQ and you want a pre-market plan, just look at my plan for the ES. It's basically the same, right? If you look, I have the same charts. I have the same range that I'm looking for. Obviously, the numbers are going to be different because it's a different instrument, right? But I'm looking to short the highs. I'm looking to long the lows. And I'm looking for this fair value gap to be closed. I mean, I'm not even going to go through the price action. You can see that's exactly what we did. We ran to the previous day high instead of sweeping it. We immediately failed. We tapped back into the 50%. We traded straight down, right? And we talked about this in the Discord. Valdez was long into the previous day high, and then he got short coming back down. Sometimes you just don't nuke it, man. Like the levels are there, right? Like if you like them, take them, right? You're paying inside the Discord. Like I'm putting together a pre-market plan for you. So if you see this plan and you're not marking these levels, at least so you have them. I mean, these are the levels. This is where the market is reversing. Like if I'm wrong, then hey, call me out for it. But every day, if you read this pre-market plan and you watch my market review, like this is where the market's reversing. So hey, it is what it is. Anyway, we trade down and we go straight down and close the fair value gap. The only one that was different, right? And I use different very, very lightly, right? The only one that was different, and mostly because it just didn't have a fair value gap to close, was the Dow Jones, right? Like we didn't have a 15-minute fair value gap down here. So it just went from the top of the range, swept the highs, failed, and came back down to the bottom of the range. Like I couldn't have made this any clearer inside of the pre-market prep that we do every single day. I told you guys exactly what the market was going to do 7-8 hours ago. I said I expect the market to trade inside of this range, right? All you got to do is just be patient and wait for the setup to appear, and it's going to be there, okay? Why was I so confident? The volatility index is what gives me my confidence, because what it does is it ensures that at my levels, the market is gearing up to go long or short, okay? If the VIX trades up, we're looking for shorts. If it trades down, I'm looking for longs. But because we were already at the high, I'm ixnay on longs. I did not take one long position today. Like there was no point, in my opinion, right? For me, right, in my system. But what did we get when we came down here inside of the VIX, right at the same time that the market was reversing, right inside of 10 o'clock, 9:50? We got this beautiful reversal pattern inside of 50% of the 4-hour wick. People call it the CE, okay? We get higher lows and we finally break the high right at 10:30. That's the exact same time the market did it. And all you saw was strength of market, strength of market, strength of market. People were trying to short right here and I was warning against it. I was saying, I don't think that's a good idea. People were trying to buy against it, right? Like people were trying to go long. And sure enough, the market took out those highs. People probably tried to buy here, took out those highs, and just continued to rally. And if you were here for the pre-market prep, I said the market's going to look to target this daily resistance on the VIX, and then we're going to look for 43 and potentially 50. We got as high as 41.465, and that was good enough for the largest turnaround in stock market history. So as long as this VIX continues its dominance on the weekly, on the monthly, right, on the 3-month, on the yearly, we will remain in a down trend. I don't know who I got to say it for, the people in the back. The VIX strength is real. It is telling you that big money is loading into sell side positions. I know most of you haven't traded this action before, but I'm telling you right now, the worst thing you could do is try to be an effing hero, right? Until this VIX starts to calm down, which I don't see it doing anytime soon, I think we're headed toward the 63s over the next 3 months. If not, in the next 2 weeks, because we got CPI and PPI coming up, okay? So just be aware that the direction is down, all right? We will get these pops. We've been getting them for the last 3 or 4 weeks, and every single Monday, I see the same thing on YouTube. The bottom is in. bull market is back. And I'm like, dude, look at the volatility index, right? This is where the true data lies, right? For the future, it's telling you who's in control. What we did getting over this wick right here was absolutely important. This was August 5th's low, right? We're back above it, and now we're going to be targeting the VIX at 64. If you think the volatility is unbearable now, while the VIX is in the 30s and the 40s, you ain't seen shit yet. That's just me being blunt. During COVID, the volatility index reached levels of 148. So if you think over 30 is something, wait till we get over 50 and 60. So it would behoove you to start practice trading this market and getting used to the volatility instead of being those quitters out there that say, hey, while this volatility is going on, just don't trade the market. Be a spectator. Bullshit. We here to make money, man. Get in your bag. If you need a system, if you need some assistance, jump into the trader shop and we'll see if we can't help you out. If not, it's only $40 a month. Link is in the description down below. That being said, this is the market review. My name is T. Hobbs from the Trader Shop, and we'll catch you guys on the next one, man. Peace.